joining. Um, we go- Thank you, Abhishek, for joining. We're just the purpose of this video and recording is to create an edu-based webinar and interactive video for our users to understand what is private equity, what is pre-IPO investments. We've got Abhishek Ginodia. He's the co-founder and CEO of Altius Investec. He is a veteran of this industry for the last 7 to 10 years. He holds a CA and CFA, and he's a predominant expert within unlisted and listed shares. So I'll hand it over to you, Abhishek. You can introduce yourself, go over the PPT, and then we have some questions that are pre-recorded by our users. So I'll ask you them, and we can conclude then. Thank you.
Great, great. Thank you, Neil, for having me. Thank you for the introduction. So, how we'll possibly do is we'll just start with a small intro. So, thank you for joining in. This is Abhishek. I am I'm the alternative investment space through and through for the last 6-7 years. I started my career with PwC, spent a couple of years there, and then spent some time with the FMCG space in companies like ITC and Marico. Been always involved in the investment uh, uh, the entire investment space, right from the listed markets to real estate and private equity is something which we started getting some deals along the way. And what we basically realized that there is a huge need for people to get invested into companies early on. So what we saw happening from in the last 5 years is most of the value creation started happening for these companies in the private space itself. And once these companies went public, the post IPO pricing did not allow an investor to be part of the entire value creation journey. And that is where we started working on a platform which allowed people to invest into pre IPO investments. So what we've tried to do here is we have tried to create a platform which makes investing into pre-IPO companies as easy as it is for you to invest into a listed company like Reliance Industries or Tisco or Tata through Zerodha. So a similar interface is now being provided for investing into pre-IPO companies as well. So let's dive in. Um, so what we will basically cover here is what are pre-IPO investments, why should someone look at pre-IPO investments, what are the criteria, how should you shortlist, how does the risk and rewards play out, what is the taxation like, what are the companies which we have seen in the pre-IPO space in the past, people have invested and what kind of returns have they gotten. And now once we have the entire background, looking forward, what are the companies which we should look at, and more importantly, the antithesis part, what are the companies which we should be careful about, or what are the ideas or what are the traits which we should look for so that we can avoid the wrong choice of companies. Because as in equity investing, a large part of investing in the pre-IPO companies is also to shortlist the right uh, candidates for your portfolio. So coming back to the basics, absolute basics, what are pre-IPO companies? Essentially, companies which have not come out with their IPO, which are not available on exchanges like NSE, BSE, MSCI. That is the bunch of companies which we classify in the pre-IPO segment. Now, pre-IPO is actually a subset of the entire unlisted segment. So if I give you a overview, total universe of companies existing in India is close to 6.5 lakh companies. Out of that, close to 5,000 to 7,000 is what is listed on the nationalized stock exchanges like NSE and BSE. Rest of the companies fall under the unlisted criteria. In the unlisted criteria, companies which are in track for an IPO or have crossed a certain parameter in terms of market value, liquidity, sustainability is what we generally classify as a pre-IPO company. That is, this is a smaller subset of the unlisted companies bucket, which are very prime candidates for getting listed on the stock exchanges. Now, why invest into pre-IPO equities? One is early access. So there's a age-old adage called "early bird gets the worm." So it's something similar. You have to invest early so that you are part of a longer wealth creation journey in the company. And once the company goes for an IPO, at that point, there are so many investors who have already evaluated the company and priced it absolutely right that there is no room for a additional alpha to be generated. Second, pointer, diversification. So the pre-IPO industry moves a little less, is very less correlated with the listed space. So if the listed markets correct by 15% or increases by 15%, the pre-IPO markets, because the holding capacity of investors in general is higher than that of the listed space, therefore the volatility in such markets are fairly low. So if the listed markets have rationalized by 10%, maybe the pre-IPO would have rationalized only by a 3 to 4% kind of scenario. So this allows your entire portfolio averaging to handle out very well. Third, creator creation in the pre-IPO space. So like I said, if you look at 10 years earlier, most of the companies, what they used to do is that they used to start the business, get to a certain scale, then go for an IPO. And post the IPO, they would keep growing in the post IPO markets, in the listed markets, for the next 10, 15, 20 years. And then they used to reach size of 30, 40,000 crores in market cap. But if you look at the unicorns which are getting listed in the current scenario, say if you look at Zomato or Nykaa or Paytm, all of these have already come at a market cap of 30, 40, 50,000 crores. And therefore, the entire value creation has happened in the private space itself. So for an investor, it is very important that he gets a piece of this value creation in his portfolio also. And this is the reason why in the current day and age, it is very important for investors to get a piece of the pre-IPO space as well. Now, like we said that while pre-IPO is definitely something which you should look at, how do you start shortlisting companies? Not everything which is available should be a part of your portfolio. So how do you shortlist certain companies? So the first criteria which we generally use, so these are criteria which generally used by auditors to shortlist investment opportunities for their clients. So the first is prior investments by PVC firms. What this ensures is that there is a very strong corporate governance, there is a very strong board oversight, and there is a very clear path of exit. It may be through a secondary exit, it may be through an IPO. But what PVC firms ensures is that the company is governed and managed to the highest of standards. Therefore, an investor who is not holding a significant stake in a company can also be assured that his money is being managed by the board in a very logical manner, and he would have some insight into when he would be able to exit. That may either be through a secondary acquisition, or that may be through a primary issue in the IPO space. Second, what we look for is significant mispricing when we compare companies in the pre-IPO space to listed companies or to global peers. So just for example, how we generally do this is we evaluate a company and then we take its listed peer. So just for example, Kurlon Limited is a manufacturer of mattresses. Sheila Foam, which runs the brand Sleepwell, is a listed company which is in the exact same industry of manufacturing mattresses and beddings. So what we would generally do is evaluate Kurlon's PE, Kurlon's book value, Kurlon's growth rate to that of Sheila Foam, and then come to a conclusion whether by this comparison Kurlon is expensively valued, or whether it is showing some room for a pricing miscorrection, which will eventually happen when the company nears an IPO. Third, what we look for is reasonable liquidity and availability of options. So while investors get the best exit when a secondary exit happens or an IPO happens, but in case there is a requirement to exit an investment, even say 1 month after investing, there should be a reasonable liquidity in the stock so that any block size can be liquidated within a span of 1 to 2 days itself. Fourth, we look for companies which are already in an IPO track. So how do we get this? The companies might have filed their DRHPs, they might have appointed bankers, they might have done a pre-IPO round, which is generally a very strong precursor to a public issue. And we keep track of these investments, and we make available this information to investors on the platform itself, so that they're able to track which companies have filed their DRHP, and that makes a company much more likely to IPO within the next 6 months to a year to a year and a half kind of a time span. Now coming to how does a risk and reward play out for a pre-IPO company. So firstly, the risk profile and the holding period. Risk profile for pre-IPO companies is somewhere between startup investing and the listed space. And it is much closer to the listed space because the company profiles are very similar to the companies which you would find in the listed space. So companies like HDFC Securities, uh, Tata Technologies, MobiKwik, all of these are companies which have crossed the market cap of 5,000, 6,000, 10,000 crores. And therefore, there is no risk of company mismanagement. There is very little risk of uh, the company going bust. And therefore, it is very similar to the listed space with an added conundrum of liquidity. So there is a while for say Reliance Industries, you might be able to liquidate it within a second. For these companies, it might take half a day or a day or something like that. What is an ideal time horizon for which a person should hold unlisted shares is generally 2 to 3 years, because unlisted companies or pre-IPO companies generally give you returns when there happens value unlocking, and this value unlocking happens on certain triggers. Say today a company is in the pre-IPO space, and tomorrow after you have invested, 2 months later it files for a DRHP. At that point, 1,000 new investors will start looking at the company, and therefore there will be a sudden value unlocking in the company. Once it receives the SEBI approval, there is another value unlocking. It raises a
Abhishek,
pre-IPO.
sorry to stop you there. Just one key question around the risk and reward was that what is a DRHP before you proceed? Because that had been the most popular question. Yeah.
Sure. So a DRHP is a draft red herring prospectus. So before, if a company wants to IPO, the company needs to approach SEBI and prepare a document. And this is a very wholesome document which gives a very comprehensive summary of the industry in which the company operates, the financials of the company, how the company has been, the shareholding, the past share issuances, the future projections by the founders, notes by expert. And this forms a basis by which SEBI will judge whether the company is fit to go for an IPO. And this is the document which gets submitted to SEBI. SEBI in turn gives its own observations on the DRHP. And once the observations are corrected, the document is resubmitted, and then the company can go for a listing. So without the DRHP, the DRHP then gets converted on RHP. So DRHP is draft red herring prospectus, and RHP is a red herring prospectus. And once the RHP is filed, then the company can list at any point of time. Then it is a matter of weeks within which a filing, within which a listing of a company can happen.
And in your observation, how long do you think the IPO happens after a company files for DRHP in your an average observation period?
Sure. So generally, post DRHP filing, SEBI reverts within the next 2 to 3 months. Uh, if there are observations on the DRHP, that company might take another month or 2 months to give a response to these observations. And once SEBI approves these observations or notes these observations, then the company has a 6 month timeline to get a listing done. So there is the validity of that observations is only for a 6 month period. So generally, from a DRHP to a listing, general timeline would be anywhere between 9 to 12 months.
Okay, sounds good. This is perfect. Thank you.
Right. Uh, Now coming to the return section, how does the return profile compare to the listed space or to the private equities or to the startup space? So over the period of last 10 years, since we've been fairly active in this space and we've built a large portfolio in this space, we've seen a portfolio return of anywhere between 25 to 28% uh, CAGR since the last 10 years. Now, within this portfolio, obviously, there have been companies which have gone 8x, 9x, 10x, 20x as well. Just for example, CSK. CSK we identified, and which was a very, very clear thesis in 2018 for close to 20 rupees. Currently, CSK is trading around 180, 190 rupees. So it's almost a 10x return in a short 2 year span. And we'll try and cover CSK as well, and we'll sort of give an insight into what we felt at that time is that CSK, why is it so cheaply valued? And there was a significant mispricing in the market, and we actually capitalized on that, and that helped the entire return for those investors who were able to buy into CSK generate anywhere from 5x, 6x, 7x basis their entry points within a span of 1 to 2 years itself. Coming to the last point, exit. Exit generally happens either through an IPO or through an exit in the secondary market. Plus, if you want to exit, we ensure that there is a certain amount of liquidity always present in the market, so that if you want to exit today, possibly within a day or two, we will help you liquidate your holdings as well. So it is not that you have to keep locked in for the next 2 years. before an IPO, you can actually liquidate even before an IPO. Now, covering some basic questions which we face, which we generally have encountered with a lot of our existing investors. So, what is the buying and the selling process? So, a general connotation in the minds of investors is that investing in pre-IPO companies is very difficult, or there is a very high barrier to investment. So this is the entire solution thesis which we have bought in. We have made the entire process extremely simplified and extremely digitized. So it works very similar to how you would invest into a listed security through any stock broking platform like Zerodha or Upstock. So you sign up, you do your KYC, you read through the companies, you select what to buy, and you place an order. Once you place an order, you have to complete the payment, and generally the shares are delivered within a span of 6 to 8 hours with a commitment of 24 hours. How are the shares delivered? So do I get to see a paper share because it's a private company? How am I getting possession of the company? So whatever shares are available in the pre-IPO space, they are all in dematerialized format. When dematerialized, what we mean is it will reflect in your demat account. So, like you would be able to say Reliance Industries, right below that you would be able to see HDB Financial Services or One MobiQuick Systems Limited, and therefore that is 100% proof that the ownership of the shares has been transferred to your account. Tomorrow, if Altius ceases to exist, those shares are still in your account and they are completely your property. So you do not have to worry about any trustee, any reliance on anyone else. Those are in your account, and that is similar to having cash in your bank account. Third question we generally face is, what is the lock-in period? Will I be able to exit my investments before an IPO? So in the pre-IPO space, there is no lock-in. So you can exit at any point of time after entering an investment. On the day of the listing, the shares go for an automated lock-in, which is mandated by SEBI, and this span is currently at 180 days. So say shares get listed on 1st of January, till 30th of September, they go for a till 30th of June, they go for a SEBI mandated lock-in. On 1st July, they open up and you can sell them as you would sell any listed shares on your registered stockbroker.
So, Abhishek, one question around this was that, like you said, in 1st of January, so can our users, say, for example, buy Chennai Super Kings, and there is an estimated date that the Chennai Super Kings is going to list on between 1st and 5th of January. Can our users avoid that volatility and sell it beforehand on 30th of December or 29th of December?
Absolutely. So the shares go for lock-in only one day prior to the listing date. So
Okay.
before that, the investors are able to exit at any point of time. So they can buy today, sell in a week's time, in a month's time, in a 3 months time span. But on the day of listing, the shares will go for lock-in. So therefore, ideally, they can transfer and they can sell out maybe 2 days in advance, just to be on the safer side.
Understood. Thank you.
So moving to the next set of FAQs, can NRIs invest into pre-IPO companies? Yes, NRIs can invest into pre-IPO companies. However, there are a set of requirements for NRIs. So for NRIs, the bank account which an NRI can use to invest is a NRO bank account, and a demat account is an NRI non-repatriable account. This ensures that, so basically with a NRO bank and a NRI non-repat account, the account is treated very similar to a domestic account. So in terms of regulations, both from a seller side and from a buyer side, it is absolutely similar to a domestic buyer or a domestic investor's account. So therefore, for an NRI investing, this is the two criteria which we generally want people to adhere to. The next question which we get is, how do I sell my holdings post listing? So, I bought the stock, the company got listed. Now, how do I sell it? So once the company gets listed, the shares automatically show up in your broker account as well as in your demat account. So there is nothing which needs to be done at your end. It simply needs to be punched as a sell order, as you would do for anything which you have bought in the listed markets also. In both these cases, you will be able to sell in the exact same manner with no additional step required from your end. What is the minimum amount? So the idea on which we have built this entire pre-IPO platform is to democratize investments into this space and bring down the earlier minimum, which was in the range of 5 lakh, 10 lakh rupees, to close to 10,000 rupees for one script. Now let's look at some of our past exits. So what we have done here is we have tabulated the investment price, the price at which it got listed, and the holding period. Post listing price comparison has not been posted here because our expertise lies in companies which are pre IPO, and therefore we have given that point of data. So just to give you a couple of examples, ICICI Lombard, ICICI Prudential, we entered both these investments close to around 68, 69, 70 rupees per share. And both of these got listed close to 5 years from our initial holding period. ICICI Lombard listed at close to 680, giving us a average return of 9.5x on our initial investment price, while ICICI Prudential got listed at 350, giving a 5x return and close to a 5-year period. RBL Bank, we invested at 76 rupees per share, and the company got listed at 518 per share in a span of just 2 years. BSE, Bombay Stock Exchange, the initial investment price was around 120 rupees per share, and it listed at a whooping 1069 per share within a time span of 5.5 years. So this gave us a return of close to 9x on our BSE investments. Very recently, we had invested into a gaming company called Nazara. So Rakesh Jhunjhunwala was also an investor into Nazara, and we got into this company. So this was actually India's first gaming company to get listed in the markets. And this ran a very successful game called Cricket World Cup, and they had rights to some of the very popular kids' names like Chota Bheem. And we invested in this at close to 430 rupees per share, and the listing price was at close to 1100 per share, giving us a 2.5x return within a span of 1.5 years. Nazara then went on to clock, I think, close to 3000 rupees per share at its highest peak within the next 6 months itself. And then it has, I think, rationalized since then. Similarly, Barbecue Nation, another portfolio company for CX Partners and Rakesh Jhunjhunwala, we invested at close to 250 rupees in this, and within a span of a year, we got close to a 2x kind of a multiple on this. Now let's come to the taxation bit. So one key difference between listed markets and pre-IPO markets is, in listed markets, the holding period for long term is 1 year. In the pre-IPO space, the holding period for long-term capital gains is 2 years. If you are buying in the pre-IPO space and you are selling in the pre-IPO space itself, so you've bought a company like, say, MobiKwik, and you actually sell it before an IPO. So you've gotten your expected returns, you do not want to experience the stock in its post-IPO journey, and therefore you want to exit now. In this case, if you have held it for 2 years, your tax rate is 20% with indexation. If you have held it for less than 2 years, it is taxed as at your slab rate. If you are selling this post the IPO on the exchange, in that case, it is treated exactly similar to the way any listed investment is treated. So if you are holding as a long-term investment, you get it at 10% LTCG for your gains in excess of 1 lakh rupees. Below 1 lakh, it is obviously tax-free, and short-term capital gains is at 15% under Section 111A. Now coming to the list of companies which we have available right now. So we just wanted you to have a taste of what companies are available on the platform right now. So just to introduce a couple of names from the leading business houses, we have Hero FinCorp, which is the NBFC from the Hero Motocorp group. We have Reliance Retail, which runs your JioMart, Reliance Retail, entire offline networks, the entire Jio physical outlets from where the SIM cards are sold. This is actually one of the largest retailers. HDB Financial is a subsidiary of HDFC Bank, so it is again a NBFC arm from the HDFC Bank itself. Five Star is one of the leading NBFCs which counts Matrix Partners, TPG as its investors. Tata Tech is a EV play which is from the house of the Tata Group, of course. We have Philips India, there's NSE, National Stock Exchange. Coming to unicorns, we have PharmEasy, MobiKwik. To people who have had Old Monk, so we have the original manufacturers of Old Monk, Mohan Mekin Limited, on the platform as well. So these are example of some of the companies. As you would see, most of these companies are either unicorns or they are subsidiaries of the top business houses which have large listed companies in India.
So,
Okay.
Abhishek, if you don't mind going back to that slide, so just couple of questions that we had. So, I'm just going to throw them right now. So, what are the total number of companies that you guys have on your platform?
So currently we have around 120 companies live on the platform. Out of
Okay.
that, close to 40 are extremely liquid. And what we do is we arrange the companies in the liquid companies coming first on the dashboard for the clients, and then the liquid companies coming in. So all of the companies which are generally available on the dashboard are somewhere where there is immense liquidity available.
Okay, that's great. And how do you guys how do you guys get all of these 150, 120 companies onto your platform? Because a lot of the questions are that these companies after doing a transaction gets deposited in your NSDL and CDSL statement. They people just wanted to know how do you get the supply for our users, if they want to buy and sell.
Makes sense. Perfect. So I think very logical question. So generally there are three methods from which we are able to source these companies. So if I take an example of say companies like which are just slightly old in nature, like Mohan Makin and maybe Five Star. So these are both companies which are maybe close to and TMB for that matter.
Yeah.
All of these companies are close to 50 years old, right? And therefore there are a lot of existing investors in these companies who had invested along their journey, and they have made multiples on their initial investments, and they are now looking to liquidate a part of their investments so that they can use it for their other fund requirements. For companies which are in the unicorn space, for companies like MobiQuick and FarmEasy, generally these would be through ESOP holders. So these companies generally have a huge ESOP pool, and we generally are able to provide these companies a platform wherein their ESOP holders are now able to liquidate, because for ESOP holders, a majority portion of their net worth gets tied up with the company stock because they spend say 5 years, 7 years, 8 years in the company, and therefore majority of their net worth gets invested into the company's holdings itself. And therefore, when these employees exit, we are able to bring these shares on board for our investors.
Okay.
Third source is generally uh, funds which are holding onto these companies. So, just for example, NSC, a lot of funds are invested, large funds, like companies which are invested close to 500,000 crores. And now they are reaching a end of a fund life scenarios. They were a fund for 7 years, and at some point they have to mandatorily liquidate their fund and give an exit to their investors. And thus we buy these stocks from those funds, and then we allow again investors to come in to these spaces.
Got it. And another key question was that you had said that a lot of your source comes from, say, these big VCPE firms or someone who has an ESOP, right? Some
Right.
question, one predominant question was on the buying side was that, say, for example, a person who had worked for FarmEasy for years now and has a decent amount of ESOPs that he's willing to share. But why would he share now before listing on IPO? I mean, he's a few months before where he could have had maybe 4 or 5 times even more than what he has today.
Absolutely makes sense. So generally, what happens is an IPO is a slightly uncertain event, right?
Hmm.
And why investors are able to earn a more than average return in a pre-IPO investment is because they are willing to take that liquidity risk.
Hmm.
So, just for example, someone who's worked in pharmacy for say 7 years,
Hmm.
and they have now been allotted say close to 5 crore worth of ESOPs,
Right.
and tomorrow somebody is looking to buy a house.
Hmm.
That house cannot wait for the company to IPO, right?
Hmm.
So
Hmm.
therefore, to fund that requirement, what these people generally do is they part with a certain percentage of their entire holding in the company, so
Hmm.
that they can also meet their life expenses, and they also hold on to the remainder so that they can also enjoy the uh, you know
Hmm.
5x or 3x or whatever multiple which they might get post an IPO.
Okay, that makes sense. Okay, that makes sense. Thank you so much. Thank you for the answers.
So moving on, what we think would be beneficial is that we will look at certain companies so that it forms as a starting basis wherein the users can understand what companies to look at, how do we look at, and why are these companies something which are worth looking at. So the first company which we would want to take up is Studs Accessories. So Studs, I think if you ride a two-wheeler, you would have definitely been a user of this product, or if not a user, you would have definitely even seen it on the streets, because Studs is the largest manufacturer of helmets in the world, and it actually exports its products to more than 39 countries. They have three production units which are based out of majorly Haryana, so they have majorly close to Faridabad, and they have two brands. One is Studs, and the premium version sells under the brand name of SMK. Now, what we find good about Studs is practically debt free, and they posted this third plant completely by internal accruals. So they were actually supposed to IPO close to a 2 year period earlier. So I think they were planning to IPO somewhere around 2019, 2020. But what they did was they were doing good business, and therefore their cash flows from the company itself supported them to build out their third plant, which was then their primary reason to go for an IPO. So therefore, we like the way the company is structured. We like the way the company has managed its entire capital requirement. It is practically a leader in its segment with close to a 25% market share. It has a very strong EBITDA margin. So they enjoy EBITDA margins of close to 24-25%. And with the current market scenario, the price has rationalized from close to a 2200 level to a 1200 per share kind of a level. Coming next to CSK. So CSK, IPL, everyone knows it just got over. The IPL fever is still there, maybe. But what we see with when we see with CSK is that sports is actually one of the greatest sports, and specifically cricket in sports is one of the greatest value creators for from both an investment and from both a GDP perspective. So what let's go back here a little and let's see how CSK came into being. So CSK was actually a part of India Cements, and India Cements actually did a demerger in which every shareholder of India Cements was allotted certain shares in CSK as well. And these shares got allotted at a pricing of 11 rupees per share to the investors of India Cements. So just to give you a brief background why we at that point of time were very clear that CSK proposed a very value buy for the investors. At 11 rupees, I think CSK has close to 33 crore shares outstanding. So it would roughly translate to a 350 crore market cap, right? If we go back in time a little to 2011 or 2014, if I'm not wrong, in 2014 or 2015, Pune Warriors was sold by the BCCI for close to 1900 crores. And in 2019, what we realized is CSK, one of the most successful franchisees, because of the mispricing, was available at a measly 350 crores. And that is where we understood that this is a gross mispricing by the investment ecosystem, and it is a good time for people to get invested into this. And we made CSK available, and a lot of investors put money into it. And fortunately, slowly and steadily, the price kept going up. We will maybe go through the graph also in a while. And with the various levels of unlocking happening, with new teams getting sold, which was the Gujarat Titans and the Lucknow Super Giants. Now recently with the sale of media rights, that 11 rupee a share went up till close to 220, 230 rupee a share at the peak of the market. So now coming back to this slide and to understand why CSK still makes a logical investment is currently it is actually the second most successful IPL franchisee. Recently, Forbes had done a valuation for all the IPL teams at which it had valued CSK at $1.15 billion. At 33 crore shares outstanding, this would translate close to a 280 per share kind of valuation for CSK's equity shares. However, the current market valuation is still at 170, 160 per share. And therefore, again, we see that the mispricing, while it has corrected significantly in the last 2 years, it has not completely corrected. So there's still a 30-40% leg room where investors will be able to enjoy a substantial benefit in the next couple of years. Similarly, if you compare CSK's value with current valuation, so I think 170, it would roughly translate to a 6,500 crore valuation. Even a fresh team like Lucknow Super Giants got sold at a valuation higher than this. Therefore, we think that there's a very logical gap which is available in CSK. And once companies start listing, once value unlocking starts happening, once liquidity increases, this will handsomely reward its investors. In terms of broadcasting revenue, so broadcasting actually forms the largest part of how cricket teams make money. So IPL teams are playing matches, Star India is streaming that on Hotstar. Star India is streaming that on their TV channels. And for this, Star India is paying a huge amount of money to BCCI. BCCI is keeping a bunch of that money, and the rest it is distributing between the IPL franchisees. And this money is what forms the major part of the revenue for CSK. Now, what has happened is from 16 to 22, BCCI made 16,000 crores for the broadcasting rights. But this next 5 years, BCCI has won the broadcasting rights at 48,000 crores, which is 3x from what it was making till the last 5 years. And therefore, we see that there will be a lot of predictable revenues for the IPL teams. And this entire thesis then makes IPL, it makes CSK a very good contender for, pre-IPO investment candidate. Quickly covering Hexaware. Hexaware is one of the leading mid-sized IT firms. So it is basically providing services into cloud transformation, uh, digital customer onboarding, and automation, right? And this was actually again a listed company, which and had a majority holding stake by Bearings Private Equity. Now, Bearings in 2018 bought out a delisting offer at I think close to 480, 470 rupees. And they bought out the entire stake which was held by the public, and then they sold this entire company to Carlyle. So now why does Hexaware look good to us? One, it has a diverse product offering. So if you look at Hexaware's balance sheet, the entire revenue is very evenly split between manufacturing, airlines, media, entertainment, hospitality, and therefore, and even globally. So it has revenues from Northeast, North America, Europe, Asia Pacific, Australia, all separate. So therefore, it is very stable in terms of both the segment as well as geography. Second, like I was saying, Carlyle had invested into this company at close to a $3 billion valuation, but with the current market conditions, it's actually available on Altius at just a $2 billion market cap. So again, a PE VC firm investing with such a huge stake becomes a very good corporate governance insurer or a very stable exit route for a retail investor as well. And if you look at the financials as well, I think Hexaware has posted very strong numbers. For the last 5 years, it has grown its revenue for 15 years, even in the COVID years. And its PBT has grown at close to 17% for the last 5 years. So both from a product standpoint, from a investor standpoint, and from a financial standpoint, we find Hexaware to check a lot of boxes. Now coming to what to maybe avoid or what to be a little careful of. So Reliance Retail. So Reliance Retail is a great company. It is one of the largest retailers in India. It is many times DMart, Future Retail, Vishal, Megamart all put together. It is much larger than all of those. So what is wrong with the company, or why are we highlighting this in a concerning tone? So Reliance Retail has a capital structure in which there is a huge dilution which is supposed to happen. And while the valuation at the current capital base is still logical, once this dilution happens, it will become a little unattractive, right? And therefore, we would want our customers, or we would want people who invest through our platform to be very cognizant of this fact. And we have actually highlighted this very clearly on the platform itself. So if you go under Reliance Retail, you will find the entire write-up which gives you the detail that Reliance Retail has this weird capital conundrum which we have seen. Second, coming to Boat. So Boat, again, excellent company. Most of you would have used headphones or speakers of Boat or smartwatches for that matter. Growth is stupendous. Founders are amazing. Company is probably one of the only Indian companies which has broken in otherwise a completely Chinese dominated uh, wearable segment. But coming to the investing angle, current valuation for Boat is available at close to $2.2 billion. But the company itself is expecting an IPO at a $1.5 billion valuation. Now, post IPO, it might rise, it might actually justify the current valuation also. But what we would suggest is, unless there is a huge margin of safety for investors, we would not recommend to invest without a decent margin of safety. So we would not want anyone to get into an pre-IPO at a valuation higher than what is their expectation for an IPO. Great. Neil, I think this was it from my side. You
Yeah.
want me to do a through, or do we
Yeah,
want to?
so that's great. Thank you so much, Abhishek. I think we covered most of the questions that we have. I just want to reiterate that minimum investment is 10,000. NRIs can also invest. There are about 120, companies. The taxation was mentioned in the slide, so we'll share the slides also with you. Apart from that, all the one key question was around selling. Abhishek, just one last thing was that users can come and buy products and also sell their shares also, right? That they've bought,
Right.
correct?
Right.
And what happens is that you guys will assist, our team will assist them in terms of selling the shares, right? We'll tell them that how to fill out the form, etc. Another key question was that are there any stocks, for example, that are maybe in danger zone where they're illiquid in nature? Say for example, I bought a stock A today, and in say 5 days, some issue has come up through regulation, or we found that we've done some fraudulent activity. Would you or would I'm assuming there will be illiquidity in that stock, correct? Is that a fair assumption to have?
Right. So, Neil, like I said, generally, what the options which we make available for an automated investment are companies which are, at least maybe 5,000 crores in market cap,
Okay.
and therefore there is very, very, very little chance. Now, say a
Mhm.
yes bank like case might happen in the listed space also and in the pre-IPO space as well.
Fair
So
enough.
that complete fraud might happen where suddenly, there is a huge fraud which has been unveiled. But in general, we do not, at least till date in the last 10 years, we've not faced a scenario where there has been a complete fraud and the company has completely collapsed.
Okay, that's fair enough. That can be expected at any point, like in any investment. So that's
It's
fine.
an equity investment, so yeah, obviously there's no capital guarantee per se. But
Hmm.
generally, because we are not doing startups
Hmm.
that tomorrow we don't know whether the company will live or die. These are
Hmm.
all companies with very established business models, with great backers, with a significantly large market cap.
Got it.
So
Got it. Understood. So that's great. Another key question was that I think you can even show that while we talk. You can go through your portal. Basically, a lot of our users were like, how do I make decisions? In purchasing these companies. Firstly, they don't really have access to a lot of the financial data. Secondly, they don't know these companies. Like Studs, for example, like you said, the biggest manufacturer of helmets in the world. Some of our users might not even know that name. They might have the helmet, right? Another question was, even though they have this so much financial data that they have to process through, because not everyone's an expert in that sense, right? How do they make such decisions to what to buy and what not to buy? That's the key sort of questions that we have.
great, great. So let me cover that through the portal as well, so that
Yeah,
it's easier for us to be able to
absolutely,
track it.
absolutely.
So let me just switch to the trade platform. Cool. So Neil, is the screen visible now?
Yes, it's visible now. Yeah.
Great. So this is how the entire platform looks like for investors who would want to hop in and make a pre-IPO investments. So this is the dashboard which generally shows up. So you have the holdings here, wherein you get to see the list of companies. What is the current value? What was the initial investment value? What are the recent transactions which you had executed? What are the companies in spotlight right now? Then we have classified certain companies into three different headers. So one is startup unicorns. These are companies which are in the tech or the unicorn space, high growth companies backed by PE firms. Second is popular companies. These are companies which are fairly old, fairly stable, fairly well established by big business houses.
Hmm.
And the third is companies with dividend yields. So if an investor is a very aggressive growth investor, then he can look at, and this is, I'll just try to answer the question of how should a person start shortlisting companies. So to help with that entire process, what we've done is, for a growth investor, we have given three options to get the ball rolling. So he'll be able to look at MobiKwik, FarmEasy, BlueSmart. For popular companies, you'll be able to look at HDFC Securities, Exaware, CSK. And say if it's an investor who does not want to take too much risk and is looking for much more stable companies with high dividend yields, these are three options which we have listed down. So Otis, GKN, and AV Thomas can be looked at from a dividend yield perspective. Now, coming to how do you really shortlist companies in the pre-IPO space? For this, we have something called a screener, which we had built out. So to access the screener, you simply click here, and this takes you to the screener screen. Now, an investor can actually select which company he would want to invest by selecting factors which fit his own investment thesis. So, say if you would want to invest into companies which are only maybe over 5,000 crores and which would have filed their DRHPs.
Right.
So, this is how you could shortlist companies like this. So, more than 5,000 and DRHP filed. So, now we have both Lava International, Vikram Solar, Tamil Nadu Mercantile Bank, and BKG. Now what we also have available here is market cap for these companies, revenue for these companies, and P ratio for these companies, and even dividend yields. So what a person who wants to evaluate certain companies can do is he can first put out the filters here, and then he can actually evaluate these data points to ensure that he is able to find companies which are actually logical to him. So
Hmm.
say if someone is interested in the FMCG space and BKG sounds like a good option for him, he can evaluate the company. Say, however, if the P ratio looks too high and if he prefers a banking stock, he can again go to TMB.
Hmm.
He sees that the P ratio is at 12.99. And if he wants to deep dive into TMB, he can simply click on trade here. And this will take him to the company's information page. So here he will be able to see how the share price is moved. So just for example, if we take TMB, it started off at 310, 320, went up till 650, 670. Uh, with in the last 6 months, it has rationalized from a high of 720 to close to around 540, 550 now. They will be able to see what dividends it has paid. So what corporate action it has taken. So in 2017, they gave a bonus of 500 is to one share. So for every one share which was held, they gave 500 shares. Then in 2021, they gave a dividend of 5 rupees per share. On 2nd June 2022, they have given a dividend of 10 rupees per share. So this gives dividend yield of close to 1.82%,
Hmm.
leads to a price to book of 1.66 and gives a price to equity of 12.99.
Okay.
So this allows an investor to actually understand the entire pricing aspect and whether it is rightly priced, heavily priced, or richly valued. And then he can actually also go into the balance sheet and the P&L sections and deep dive into the company. So he'll be able to see the last 3 to 5 year data points. He will be able to a deep dive into this. Uh, Similarly, profit and loss data is also available for the last 3 years. It's in some companies it is available for a 5 to 6 year time span. Uh, Under the ancillary section, we've also put in some certain data points. I think this was not available for TMP, but let me just show you this data for, say, CSK. So for CSK, you will be able to also see the entire ratio analysis for revenue growth, margin, net margin, ROE, debt to equity. So this allows a investor to actually get access to the complete data set for a company, and he can actually analyze all of these data points and understand what company to invest in. But generally, what we suggest is a starting point for people who are getting into it for the first time can be companies which are listed on the dashboard itself. Because here we try and shortlist certain companies which look logical to us, so that it forms a starting point for investors to make their first couple of investments. Now, just to complete a walkthrough, say CSK is something which sounds logical to me, and therefore if I decide to invest into it, the process is very simple. You actually sign up to the platform, you complete your KYC. KYC is a part of the My Account section. So it basically requires your name, demat details, bank details, and documents in case these don't get auto verified. So actually they are all API verified. So if you enter your bank details, they get automatically tallied through an API. In case there's a discrepancy, there will be an option to upload a cancelled check or a PAN card copy. And once you submit this, generally your KYC gets verified within a time span of 15 to 20 minutes itself. Now, say once the account is active and you want to invest into, say, CSK for that matter, and if I want to go ahead with 100 shares, I can simply enter 100 here. the rate gets auto calculated and I can simply click place order. Once I've clicked place order, the order summary page is generated and I can select what mode of payment I want to use to complete the transaction and click on proceed to pay. Once we do this, this lands us on the HDFC gateway, wherein we can choose to pay with any debit card, UPI, or net banking. And this once the payment is obviously completed, this transaction gets visible at your order book. So this is the order we had just placed, CSK 100 shares at 167. The order has been placed. Because we did not complete with the payment, therefore it's giving a pay now option. But once the payment is completed, it will update the payment verification to green, and then your share transfers will be pending. Generally, by the end of the day, the team will punch in the shares and the order gets completed. And your transaction will actually move to the holding section, wherein you will be able to see your holdings as well. And here you will be able to track your quantity, your average cost, your last traded value, your current portfolio value, and your P&L.
Got it. Thank you. Yeah, that I think that covers majority of the questions. That covers majority of the information on the the webinar, and it also covers the walkthrough of the portal. So we'll get these questions also sent to our users, and we'll let you know how that goes. But Abhishek, I really thank you for your time today. I appreciate your time and thank you for walking us through. We'll catch up soon again on another webinar targeting different companies where users can invest.
Great, great. Thank you, Neil. Thank you so much for having me. It was really a good experience. Thank you.
Thank you. Bye. Bye. Bye.